Hey everyone, thanks for coming. Good morning. For those of you who don't know, this event is happening at Taos County Economic Development Corporation, so thanks so much for showing up. And I'm Abby, I'm the outreach coordinator here. I have a business card over here if you have any questions. Feel free to reach out to me in person or via email. Thanks so much for the Tennie group for coming out. They're coming from North Carolina, so big trip today. We have breakfast in the back, we have burritos, we got veggie and meat options, we got coffee and water. I think this is projected to last about 2 hours today. So yeah, feel free to help yourself to food and seconds if there are more. And with that I'm going to hand it over to Mr. Tennie.
Thank y'all so much. Good morning, everyone.
Morning.
Well, my name is Darrell K, and I'm with the Tennie Group. It's a pleasure to be back out here. Been out here several times. Every time I come out here, I love it. I love the tour through the mountains and everything. So I want to come spend some time out here. That's what I want to do. But again, my name is Darrell K, and we're with the Tennie Group, the Tennie Agricultural Group. Also, I'd like to let him introduce himself. I'm going to introduce himself, okay?
Hi everyone, my name is Alako Jacobs. I am from Lumberton, Pembroke, North Carolina. I am part of the Lumbee tribe over there, so, and I'm also a part-time farmer, but I am the outreach coordinator for the Tennie Group and also Farmers Outreach, and it's nice to meet you guys.
We travel this country, and Mr. Lockhart, like I said, he runs our University of North Carolina office, okay? And we have offices in North Carolina, South Carolina, Arkansas, Mississippi. We're looking to do the Midwest, and we also looking to have opportunity out here in New Mexico, okay? We work with farmers and ranchers across the country and the territories. As well, I just came back from Africa last week, so we're looking to work some projects, import-export projects with our farmers and ranchers. Because where we was at in Tanzania, 6% of there is agriculture, okay? And so I said island because we work with Puerto Rico, the Virgin Islands, and we want to bridge that gap with farmers and ranchers across the United States, okay? With the Tennie Group, and also we're with Agribusiness Crop Insurance Group, okay? One of my companies, I am a crop insurance agent, and we work with farmers in understanding crop insurance. What does that mean to have crop insurance, okay? Now, but today, Farmers Outreach is our non-profit arm, okay? We do the same thing, but Farmers Outreach is our non-profit arm. And where we work with farmers and ranchers across the country understanding agribusiness. What does it mean to be in agribusiness? What does it mean by structures? What does it mean by engine structure? What does all that mean? We're going to share that today. But we have this thing right here, trademark, called the agribusiness way. That's our trademark, okay? My industry, I'm undergrad at Sacramento State University, agribusiness, been 20 plus years in corporate America. And one of the things I saw was that no one was trying to define agriculture to us, okay? And as I said today, we need to redefine the word agriculture and define the word agribusiness, okay? And define the word agribusiness. So that's one of the reasons we trademark the agribusiness way, okay? Now, what I'd like to do, as I get to know everyone, I'd like to start around the room, if you don't mind, and tell me who you are, and what's your farm operation, what's your name, and tell me a little bit about yourself very briefly. I think we can start on this end right here, okay? I can pass the mic around, I guess.
Doug Patterson, Rio Zero Farms, local small market farmer.
Okay.
Hi, my name's Marge. I'm new to farming, so I'm learning to see what this is all about. If this is gonna help the farmer or help the...
That's going to help the farmer.
We'll see.
Help the farmer.
Howdy, my name is Adam Elbeck. I'm coming in from the Santa Fe Farmers Market Institute. I actually work on New Mexico Food Pathways, which is a healthy food financing initiative grant aimed at increasing access to business consulting services, one-on-one consulting. NMSU has accelerators that are agriculture specific, as well as low interest loans and grants. And my role is a resource navigator for the state, so building out a program and connections and understanding the opportunities present for farmers around New Mexico.
Great. We work with a lot of grants, we work with a lot of organizations as well. and farmers markets across the country, a lot of farm market, developing farmers market.
Hi, my name is Matt Uni, my wife Kat,
Hi, we're partners in everything.
and we have a small market garden in Paul.
Okay, great.
My name is Lucas Esquivel. My wife and I live on my family's ranch, multi-generation ranch near Tierra Maria. The ranch is a traditional cow-calf operation. My wife and I are trying to make a farmstead, we call it, so a smaller LLC, to do chickens, rabbits, and hoop house stuff.
As for cattle, we have access to croftsman agent, we can ensure rainfall on cattle, on pastures, grazing and haying. Also, we have a new LRP policy, where we can ensure the weight of cattle in the ongoing as well. Croftsman.
Good morning, thanks for having me. My name is Abraham Brown. I have a small ranchito in the area. Got a couple cows, few goats, pigs, and just building from the ground up here.
Hello, my name's Jessie and I have my little baby jet down here. We have a farm in Abiquiu and we sell the Taos and Santa Fe farm markets.
Next generation.
I'm Dan Smith, live out in Mesa, been here about 12 years. Originally from North Carolina, we're out in 40 acres. Just got on the farm scale, on the home scale, looking to scale up and do regenerative ag.
What part of North Carolina are you?
Chapel.
Oh, Chapel, okay. All right.
Hi, my name is Jack Myers. I've been involved in international development and microfinance for years and years. And since the funding for USAID has dried up, now I'm looking more towards domestic agribusiness. See what the opportunities are.
Okay.
Good morning. My name is Patrick Pacheco. I'm a local here in Taos. Grew up here. Pat's oldest son. So we run a calf operation since I was a kid. Recently we got into the meat business and regenerated back.
Good morning, Matt Pacheco. So he's the 7th generation, I'm the 6th generation,
Oh, wow.
something like that. We run about 300 head. We just started meat business 12 years ago. It's gone USD commercial the last 2 years. It's a lot harder than people think. And doing it non-traditionally, we're doing the regenerative ag. It's actually more expensive, but people don't always pay for what they think they say they want. It's a lot more expensive than people think it is. This year we're in a big drought, so it's even harder. We do everything through science. We even DNA test our cows, our calves. We ultrasound the backs before we sell them, because even though people say they like lean meat, they actually like marbling more than they like lean meat, so you gotta have the fat. It's just a huge curve and not a lot of money. So we realize that it's volume. You just got to sell a lot if you're going to hope to have at least one person make a living on that. And there's 6 of us doing this. And I had a career before it, and he still has a career to keep it going. So it's a lot tougher than people think. But saying regenerative ag just means a lot more resting. So I'm hoping I want his card for sure. I want your guys' card, and I hope you guys can help us find different avenues for revenue. Land in Taos with irrigation is about anywhere from 60 to 80,000. High-end land, 100 grand. So you're not going to buy it in Taos to run cattle. It might be your base operation. So
you do processing, right?
We do it from birth to death. So most of our animals when they get processed, are somewhere between 18 and 20 months. A weakness for us is we don't sell any old animals or mix them. If you buy an animal from us, it's been born on our place, gone through the whole process. We moved them to Texas, Oklahoma, Colorado. Like this year's We have to, there's not gonna be any grass. And we move them around till they get to finished weight, then we haul them to, we have 3 contracts with USDA killers. And we had to pay for that up front because all the little processors were booked so deep that if you didn't pay for a saw to guarantee yourself one, you didn't have one. And then it's USDA package, and then we distribute and market ourselves. We've had incidents where the big packers, when we went in, we were doing good. And somebody like Shamrock Foods just cuts below us a couple dollars and we're dead. I mean, they can dump ground beef for $4. We can't make any money for $5 now. So it's a difficult place to be if you want to do it this way.
I just left Friday. I spoke in Alabama. Actually, I speak around the country, literally every week. So I was in Friday. I was at the Tuskegee Meat Processing Annual Conference. We had a 4-day conference there. We had processors and producers for even the Virgin Islands again was there across the U.S. I just left there. I just spoke there Friday to the annual Meat Processing Conference at Tuskegee University in Alabama. Okay, so definitely get your card information because there's a lot of opportunities now and some collaborative opportunities as well. But Tuskegee has a great program. And again, like I said, 3 weeks ago, I just left Africa and working on a project in Africa where one of the things, I was in Tanzania and Zanzibar, and one of the things we're working on is bringing processing and technology information to that island as well. Importing and exporting, a lot of import. So there's a lot of projects we're working on with processing now. Here in crystals. And there's a lot of opportunities in a lot of work in putting for meat processing now. For processing.
Excellent. Thank you, sir.
Everyone get your information.
Hi, I'm Nick Cullen. Yeah, I work in fruit tree, a little fruit nursery and little market garden. I do some management for different colonies.
I work with a lot of fruit tree growers because we provide crop plants for fruit trees. We can share fruit trees.
Good morning, everybody. My name is Carol Padberg. I'm with Iron and Indigo Farm, which is a small, diversified fiber farm. We raise Leicester Longwool sheep, which is a heritage breed with long staple, good complement to the churro. It's got soft wool, good for next to the skin. We also raise dye plants for color, and we're starting out with some flax for linen as well. It's good to be here.
Good morning, my name is Robert Martinez. I have a small cow-calf operation. Probably about 10 years ago we started selling meat directly to the public, usually sides of beef, and commercially wherever possible. And so just like Pat said, this year is maybe our greatest challenge. Never been this dry. And so it's, there are a lot of things going on out there. For those of us that graze on public lands, there's the question as to whether they're even going to allow us on this year, really. And so, the challenges abound. Thank you.
Well, one of the things I want to talk briefly, maybe at the end of the conference, about our crop insurance program, okay? Because that's what we do. We insure farmers who have droughts and rain. We do a lot in Texas. When you don't get adequate rain, or you don't get adequate rain on grazing or haying, you can be covered under what's called PRF, pasture rangelands and forests. So make sure I get you guys both of that. We have some of these brochures here, but we're going to talk about at the end about policies for crop insurance, okay? Crop insurance that insures on rainfall. But today again now, I said we got very, very diverse farmers and ranchers, and I really love that, okay? Because we touch all aspects of agriculture, okay? Now, with our firm, the Tennie Group, that's a firm, I tell people, we are an agribusiness development firm, okay? We do taxation, yes. We're a tax accounting firm. We do payroll, we do financial, we do insurance. We are what we call a wraparound. When you walk in our firm, you don't walk back out. Everything you need is in that firm, from financials again, taxation, but we do agribusiness development. We build farm. And we're going to talk about today how we structure a farm, not only for taxation, but for protection, okay? We're gonna talk about today how we want you to operate your entity, not you be the farmer. We want your entity operate the farm, not you, okay? We're gonna talk about how we build that, how we structure that from the beginning, from the absolute beginning, how that works, okay? So we're gonna start today talking about the agribusiness way. I have my clicker somewhere, I don't know where I laid it to, oh, I got it right here, okay? Now we're gonna talk about our mission to educate and empower everyone and understand accountability to ensure sustainability with a solid foundation. But we're gonna amend that this year because we wanna say to ensure sustainability along with scalability, okay? We work with a lot of cooperatives, we work with a lot of farmers markets across the country. We help build that infrastructure or build that foundation, okay? We build that network, okay, in working with farmers and ranchers across the country, okay? As I speak to farmers, ranchers, organizations, institutions, literally every week around the country, we want to make sure you understand how agribusiness works, okay? The agribusiness way. That is our trademark, okay? Spent 20 plus years in corporate America, and everyone asks me all the time, I say, what's the biggest thing that you bought from corporate America? I said, the biggest thing I bought from corporate America is some have tellers, others have bankers, okay? And we want to make sure we structure it out. I'll say it again, some have tellers, others have bankers. That's what I bought back from corporate America. And so now, what we're trying to do is build our farms as we understand business financials, understand growth, scalability. But we want to talk about this thing called agribusiness. So what does that mean to be agribusiness, okay? Quick disclaimer, we have to give a disclaimer, the information here regarding the interest of a taxpayer's owner. We're not lawyers, but we can recommend lawyers, but we do have attorneys that work within our firm, okay? We do have attorneys that work within our firm. We're going to talk about today, consultancy and training service and financial planning for agribusiness management, okay? Agribusiness management, to empower, educate, and assist in developing solid foundations from the beginning. If you're in an operation, how do we restructure those operations for you, for that next generation? That's the things that we want to bring about, okay? The best business practices, structure agribusiness entities, and identify and develop financial strategies and management for your entity, okay? I heard one gentleman mention that you have an LLC, okay? How many people here have LLCs, okay? All right. How many people here are planning in or going to be in agribusiness? I think I think everyone should be here planning on being in agribusiness. The reason I ask that question is because everyone should have had their hands up, okay? Everyone should have had their hands up when I asked that question. How many people are in an entity, as we say LLCs for this purpose here, everyone should have had their hands up, okay? And we're going to explain to you why. Because we're going to talk about today, what is an entity structure? What does that look like? What is a sole proprietorship, partnership, S corporation, C corporation, that thing called nonprofit? And we always say this for last, that LLC, because that's what have most people in problems in understanding how LLCs work, okay? And what does that mean to have that, okay? Now, the people that have the LLCs, got a quick question. How many ways can you file an LLC, limited liability company? How many ways can you file it? I guess we're gonna tell you how we're gonna learn today. How many, ma'am? What's your name, ma'am?
Cat.
How many ways?
Well, I don't, he said you got to file a tax return.
But I would say hundreds of ways. 100 ways. Okay, we're gonna educate how many ways you file a limited liability company. Now I want people to ask questions today now, because again, we build in farms, we build ranches, we build these structures. Now, once we build them, we don't let you go. We work with you through our payroll department, our financial department, our insurance division. Everything in our firm, we keep you. We talk to you. We work with you throughout the year. We're not there from January 1st, April 15th. We're with you every day of the year. Okay, that's what our firm does. We build and work with you. Once we build you, we grow you, we scale you. Okay? Now, we're going to learn today how many ways you can file an LLC. Now, how many people heard of the SS4 form or the thing called an EIN number? How many people here have an EIN number? Everybody's hand should be up when he says, do you have an EIN number? Everybody's hand should be in the air, because this is the most important piece of paper you can have. But this is where everyone messes up from the absolute beginning, okay? This form right here, name, address is fine. But what happens with the EIN number is when people get to this section called 9A, here's where all the problems starts, okay? When you check that box that you are a sole proprietorship, you're just telling the IRS that I'm going to file as a 1040 Schedule C. Normally, when you check that box partnership, you just told the IRS my filing requirements is a 1065 partnership. If you check that box corporation, you just told the IRS I'm going to file 1120 S or C. You check that box church, you just told the IRS I'm going to be not filing taxes once I recognize that a church, but you'd be surprised how many churches try to file taxes. We're churches as well, okay? But the thing about this piece of paper here, where people have the problems the most, they don't understand that this is how you're talking to the IRS and to you, not to the federal side.
Okay, sorry to
No, please ask questions now.
So, we just switched from a partnership to a sole proprietorship. So this year we just we just filed a Schedule F. Do I need to do anything to tell them that we're not a partnership anymore, or does my file as a Schedule F tell them that we're not a partnership?
No, you have to let them know we're going to talk about that because you don't want to be a sole proprietorship.
Okay.
Actually, you don't want to be a partnership.
Okay.
But if your EIN number filing requirements is a partnership, you have to file that 1065.
Okay.
When people apply for the EIN number, again, when you go down to the Secretary of State in New Mexico, whatever state you reside in, and you file your articles of organization or articles of incorporation, you are not talking to nobody but the state. When you file that form in which you spoke about, now you're talking to the federal. The federal don't know you exist until you fill this piece of paper out right here. And here's where everyone's filling out wrong, okay? Now I'm going to tell you, when you don't want to switch back to sole proprietorship, but you technically wouldn't, we don't recommend 1065 partnership, but we're going to explain all that today why not, okay? All right? Now again, this is the most important piece of paper. This is what people mess up the most from the absolute beginning. Do you need an EIN number? The answer is no. Should you have an EIN number? Absolutely. The purpose of the EIN number is so you won't have to use your social security number as a sole proprietorship. You want the EIN number, okay? People say, when should I get it? When you first start, when you think about it. People ask all the time, when should I consider forming my entity? When you wake up and talk and say, I'm thinking about going to business, you form your entity right then, okay? And we're going to explain to you why you form it right then, all right? Now, this is the EIN number. But again, most important piece of paper, and you want to always keep that piece of paper. Anybody, the one thing, when you apply for EIN number, you're going to get this piece of paper here one time. This is your confirmation letter of your EIN number. But this is a form that nobody reads, okay? This piece of paper is the second most important piece of paper you can have, and you must keep this paper, and we're going to come back and explain why this piece of paper is so important. When you come to our firm, we don't want your EIN number, we want this piece of paper, okay? Because we know exactly what you are, or what you said you wanted to be, what you thought you were supposed to be, but we know how to get you straight. Because people just come to our firm, the first thing, I want an EIN number. We say, what are you? I'm this, I'm a sole proprietorship, I'm a 1065. Once they fill the taxes out, they say, oh, they get a letter back. This first thing they say, you don't know what you're doing. Well, we did what you said, so we learned early on, we don't want nothing but this letter. So we know exactly what you are, okay? So remember this piece of paper here now, okay? Now, we're going to talk about this thing called a sole proprietorship, also called an independent contractor or freelancer, okay? One person operation. This business may have a number of employees, hire a person, but the proprietor owns, runs, and manages business. No funds are required for this business, only income and expense on a 1040 Schedule C. This is called a sole proprietorship, one person operation. Now, the problem with a sole proprietorship is very easy to organize, but a sole proprietorship carries unlimited liability to the individual. Okay? Unlimited liability, legal restriction, owner receives all profit. As we're saying, as a sole proprietorship, if you had ABC Farms today, and ABC Farms made $100, ABC Farms didn't make one dime. The individual made the $100. The individual is responsible for taxation. The individual is carrying liability because ABC Farms is not the person. Because as a sole proprietorship, you are the person. Now, I tell people all the time, it's not how much money you make, It's how you receive the money you make. Okay? That's the key. How do you receive the money you make? All right? Now, as a sole proprietorship, one thing about receiving money, if we don't keep good records, we are going to be faced with tax liabilities. Okay? And responsibilities. That because we are going to be liable. Okay? Now, if ABC Farms made $100 a day, and you said, I came out here, this conference, to talk about, I spent $50 in fuel. Okay, guess what? Next year this time, your tax income is going to be $50. Well, you say, on the way out here, I stopped by the local Walmart and I bought $20 in office supplies, paper and pencils to write down what I heard. Next year this time, your tax income is only what? $30. Got back home, had a $40 repair and maintenance on my farm, a water leak, $40 repair and maintenance. What is your tax income next year? Now think about what I just said. You made $100 a day, but you had illegal tax deductions now. You had $50 in fuel,
$30 in paper and pencils.
$20 in paper and pencil, legal office supplies, and $40 in repair and maintenance on your farm. If my math is right, you made $100 a day, but you had $110 in legal tax deduction. What is your tax income next year this time? Zero. There's no taxable income. A lot of our farmers and ranchers are paying taxes they don't owe. Okay? Now, I want to be focused on this now. This is all about protection as well now. Because the farmer at this point received $100. But the farmer would not have legal tax deduction because they can utilize the farmer would not have taxable income because you utilize legal tax deductions. Okay? That's the key. Record keeping is key. We're going to go through all that today in reducing taxable income. Okay? The next thing a lot of people jump on the head don't understand, anytime you take money out of your pocket and put into your entity, that is a loan to the entity. Okay? So 2 years from now, next year, 2 years from now, 3 years from now, you said, my entity made $30,000 in profit. No, it didn't, because it owed me $20,000. Okay? So we're going to show how it's recorded on your balance sheet. Okay? Anytime, because you only pay taxes on money one time. One time. Now, this is what we're going to ask people about, a sole proprietorship. Now, the one thing about a sole proprietorship, again, one thing that a lot of people miss is this thing called, when people say, I asked that question in starting my business, people say, when should I start? So what I just want to say, I want to teach every young person in Taos how to grow a specialty crop. Use that as an example. I went to Walmart, I bought a book on how to grow a specialty crop. When you went to Walmart and you bought that book, the fuel was tax deductible, the book was tax deductible, you got back home, the computer was tax deductible. When you picked up the cell phone and dialed 1-800 number, how to grow a specialty crop, the cell phone became tax deductible, and now the internet and the utilities in your home became partially tax deductible. That's called what? Your startup costs. You have to spend money to make money. Okay? So a lot of people come to our office throughout the states that we serve people around the country, and they said, I didn't record any expenses last year, year before last, because I didn't make any income. Stop, that's not true. You don't have to make money because you have to start up money. You had startup money. Now remember now, this is called a startup cost. Okay, we're gonna get all back in that and start your startup cost. So you do keep records of that now, okay? Now, this is a Schedule C form. How many people see or ever use a Schedule C? If you're in agriculture or in any agricultural operation, this is one form you do not use. Now let me repeat this. If you're in agriculture or any agricultural operation, this is one form you do not use. You never use a Schedule C in agriculture, okay? Now remember line 1, but when we get through today, you're going to understand why you're never going to use a Schedule C again, okay? But you never use Schedule C in agriculture, okay? Remember that line 1, okay? Now, we're going to talk about legal business expenses. Now, we want people to keep records in which we're going to show in understanding how to reduce legally tax deduction. Yes, sir?
Before you get too far, I'm just wondering if you wouldn't mind, on that letter that shows you your EIN reply, how do you know how you filed, or how you formed That's the highlighted part.
When you check that box, right now, I can tell you that's a sole proprietorship, okay? Because if you were any other type of entity, it would be listed right here in the middle. Form, year, and type. If you have an EIN number, in most situations, when you pull your EIN number, you're either going to be a scheduled sole proprietorship, because tell you up top, we had blurred the name here, it's going to say single member, okay? Or it's going to have form 1065 in the middle, okay? Now, if you have an EIN number, if you have your letter, access to your letter, that is what you are. Now, right now, I know this is a sole proprietorship. There's nothing in the middle, okay? Or it's going to say up top single member, okay? If I can pull up, I can look at it, I can tell you. Now,
Small member or single member?
I think it says sole member. Sole member. We're going to talk about it. It says sole member up the top. The yellow says sole member. You are Schedule C. You don't have nothing in the middle, correct? You are a sole proprietorship. I can tell you that right now. We're going to get into that now. So what those things are. Now, let me say this now. As you ask questions, as we talk about opportunities, people are going to say, well, do I need to get a new EIN or no? We can always go back and change the filing requirements. So right now, your EIN number has a filing requirement of a sole proprietorship. Okay? Now we're going to tell you how people come, how you get that requirement, okay? All right? But anytime now, we can change that requirement. Sometimes they may go back and give you a new number, but it's always going to switch you to the old number, okay? And sometimes, okay? All right, great question now. We're going to come back to that question, okay? Now, we know, what's your name, sir?
Lucas.
Mr. Lucas is a sole proprietorship. But we're going to show you why, Mr. Lucas, you're going to be different when you leave here today, okay? All right, you're going to be different when you leave here today, okay? Now, we always tell people about utilizing legal tax deduction. We always say, we tell people, a lot of our farmers and ranchers across this country and territories, they like operating under the table. We tell them, get under that table now, because ours is that table now too now, okay? You do not need to get up and be under the table, okay? You want to be on top of the table because remember, laws are written by people who have money. So guess what? Who do you think write all of our laws? People with money wrote the laws, okay? So these are really quick. Deductible, advertising, car and truck, commission and fees. These are all ordinary business expenses, okay? Contract labor, depletion, depreciation. We're going to talk about that too as well. Employee program and benefits, insurance, interest, legal and professional fees, office expense, pension, and profit sharing, okay? Rent and lease, repair and maintenance, supplies, taxes and license, travel, meals and entertainment, utilities, and wages, okay? These are all ordinary legal tax deduction, but agriculture is not ordinary business.
Insurance?
Insurance is in there. I thought it was in, but it is coming up in insurance. That is a legal tax deduction. But let me say it again. This is ordinary business deductions, okay? Now, as we talk about all my farmers and ranchers today we're going to talk about farm income and farm expenses, okay? All right? This is where we get into the agribusiness before we get into entity structure, okay? Now, when we talk about farm income and farm expenses, this, ladies and gentlemen, this is the only way you report agricultural income. Remember that piece of paper that had one line on it? No, you never use that form. This is the way you report agricultural income. Line 1, sales of livestock and other resale items. Line 2, costs and other basis of livestock and other items reported on line A. The reason you see a minus sign there, if you bought a bull for $2,000 and you sold it for $4,000, you might want to subtract the cost basis, okay? Line 3, sales of livestock, produce and grains, and other products we raise. Now we're going to stop right there, okay? A lot of people get those two lines mixed up. A lot of people say, well, my accountant said it doesn't matter. In our firm, we use signing analysts, it doesn't matter to us because we're going to take care of you, okay? Now, the reason we stop here is because if you went out and you said, I made $100,000 and you record that line on line 1, you put $100,000 in sales and livestock and other resale items, you are not a production farmer. You are a reseller. If you bought a box of tomatoes and you went to walk into the farmer's market and you sold them, you put that income on line 1. But if you bought a box of tomatoes or meat and you went to your farm market and sold it and you raised that product, you put that income on line 3. Because if you put $100,000 on line 1, you are not a farmer. On line 3, you are a production farmer because it says sales of livestock, produce, grain, and other items you raised. Yes, sir.
So I'm gonna give you 2 examples, okay? First one, I raise a lot of hay.
Hay, correct?
Right, alfalfa, grass, whatever you want.
And we insure hay producers.
Okay, and I have premium hay.
You have 3 what now?
The premium, something I can sell to a dairy or horses or whatever. But I have cattle. So I'll go buy somebody's rained-on hay or less quality hay to feed my cattle, and then sell my premium hay at a higher price.
Did you raise it?
That I'm raising. So, you know, how does that work on that? And then I'll give you another example associated with beef.
Okay, if I can understand real quickly, we always say we like to sit down and talk to people. If you sold premium hay you raised, that income goes right here. Because when you go and apply for agricultural program payments from FSAs, NRCS, Canadian government, for all programs, most of your programs is based on production income, not resale income. For example, I'm a crop insurance agent, okay? And my firm, agribusiness, my agency, agribusiness crop insurance. I can't insure resale items, I can only insure production items. Okay? So you put that income right here because you raised that, you grew those premium hay. Okay?
And the hay that I bought to feed my own livestock, that's lower quality, that's a deduction.
That is an actual legal tax deduction.
Okay. So also in the beef industry, what we've learned, it's easier sometimes for us, especially when we send them out of state. We own the livestock, it's under our brand. We send them somewhere else for them to graze. There's about 10 different ways to do it, but what we found is if we sell them the animal and then buy it back, they have to insure, they include the death loss. They want to put either we pay for the rate of gain and insurance ourselves. Not everybody's on the same page as taking care of your livestock. But if they own them or retain ownership, a paper transfer kind of thing, after they gain so much weight, we can acquire them back as ours. See, that's a paper transfer. But we've also had situations where they don't take care of them. And we're paying them for them. And you get death loss, we have to eat it. But when they retain the ownership of them, all of a sudden they're concerned about death loss and rate of gain and everything else. But then it comes back to us, and we at the end of the finish, when we finish them. So how does that work on that same?
Well, when you sell them to them, that's going to be recorded here as well. But when you buy them back now, remember now, that's going to be an expense to you. Okay? Now, when you buy them back, you finish them, correct?
Correct. Well,
Now,
it's only on a paper transfer, so we do it on paper. They do the death loss. We're gonna pay them for what the animals that are finished their weight. But there's no, it saves us about 18 to 20% if we do a paper transfer and they don't have to borrow money. So basically, it's like a legal lending without a transfer of funds, and the animals come back to us.
well, it sounds like basically, because when animals come back to you, are you still putting in, feeding them? Are you slaughtering on the spot?
Yeah, we're slaughtering them or feeding them on the spot depending on where they're at.
Now, here we go again now. When you bought the animal back, you can either look at the sales of livestock of other resale items, but it was 2 ways I would look at that, and this may be a much longer conversation. I would either put that in other income or right here. Because see, what you should be doing, and we're going to get a little, maybe jumping ahead, you should be transferring between 3 different entities, okay? Not only one. I can tell you right now. That's what we're going to get into now. Because your farm is raising those animals, right? Your farm is selling those animals, correct? But when you buy the animal back, you buy it back for slaughter, right? I just had this in our meat processing concern. Your farm should be buying them animals back. Your meat processing company should be buying those animals back, not your farm. Now, do you sell your meat?
Yes.
Now, your meat processing is buying those animals back, okay? Now, once the meat processor sell them, now you should be selling those meat. Your retail side should be buying from the meat processing side.
That's getting pretty complex. We got 3 different companies doing the same thing.
What's the benefit of 3 companies as opposed to 1?
Liability, number 1, protection. Now you got 3 streams of revenue and 3 streams of expenditures. One company make $100,000, one company lose $100,000. There's no taxable income. Someone go out here and that meat processing company buying the cattle, bring it down the street, ring to somebody. The only thing liable is the meat processing company. The retail side and the farm can't touch it.
We're gonna need your help.
Make sense? A lot of people say, well, what's the tax strategy? It's sometimes tax strategy is always there.
Can you do it all under one umbrella and just have it as?
Well, here's the thing about an umbrella, okay? You got the meat processing company, you got the retail side, and you got the farm. You got one umbrella. If something happens to the umbrella, all 3 gonna be affected. Unless you're not Apple or IBM or Google, keep your entities separated. Like I said today, this is not only about taxation, it's about protection. And what makes your business scalable? Now you just added, that word called value added to your company. Now you have value added. You're processing, you're raising, you're processing, and you're retailing. Now we want to structure your entity so you can have value added products and components.
So we found that you gotta give the person that you're paying or renting, we used to do it all ourselves. Lease the property, try and hire somebody to help us run them. It's not as easy as people think unless you're there checking them every day, but if you give them the liability, you lose them, it's your loss, not mine.
Exactly.
They don't gain weight, it's yours, and especially if you want to do them all natural, you know.
That's a totally different ballgame.
Right, and then the same with the processing. If they screw it up, you're the kill plant.
And see, that's the thing you look at. Remember I said one company loses, one company gains, because at that time, you got 3 separate entities that you're processing, that you're working with, right? Now, one of those entities may have a problem, okay? You may see an issue. You may have a huge loss. But see, the thing about it, why you want to have multiple entities, because see, I'm jumping a little ahead. If this entity has a process, this entity has a problem, it won't affect these other 2 entities. But sometimes, this entity got a problem, you learn your mistakes from this entity, now you have maybe some debt issues, financial issues. Guess what you're gonna do? This is ABC process number 1. Well, you're gonna start ABC process number 2, you're gonna transfer the assets from AB process number 1 to number 2, you're gonna close number 1, replace that number 2, you keep processing because that don't have no liability. And that don't have debt.
I heard your scenario with these 3 different entities, you have different regulatory requirements, don't you? Okay, so when you go, you have a certain set of requirements when you're a producer, but then when you move into retail, meat sales, then you have a whole different set of liabilities.
Possibly, in state and federal. But one thing about that, yes, you're absolutely right. Now that's state, federal, some state regulation. You have to see 3 separate entities. But what people do a lot, farmers operate under one entity. So now, as you operate under one entity, all your regulatory requirements falls under one entity. So now you may be processing, you may be farming and buying a cattle, you didn't understand that there's a regulatory problem with you buying and processing that cattle within your operation. But if you separate them, as I'm saying real quick on value added, this may not have the same regulatory as the other one do. This may have a different regulatory than this other one do. But if you operate everything under one umbrella, one entity have all the regulatory problems and stuff. So if you have an issue, it may affect all your processing, all your operations.
I'm not the only part, I get it all, understand, but the value added, where are you getting that part? Why are you saying it's value added?
Because you're separating, and that's a term a lot of people use. A lot of people say, I grow tomatoes, I grow strawberries, but now I'm making it strawberry jams. That's value add, okay? Because you create an entity that's, you're growing the strawberries. Now you got an entity over here who's making the jam. That's value added, okay? You're growing the cattle, but now you got an entity that's processing the cattle. But so now your farm will be growing and processing the cattle.
Vertically integrated.
That's a good word as well, okay? It's a lot of terminologies, but the biggest thing in agriculture, a lot of people use the word value add. We're adding value to that product, okay?
It should be cost added, not value added.
It should be what now?
It should be cost added, not value added.
Right, it should be cost added, but now with that cost, how do we identify our legal margins, our profitability? Identifying and separating sometimes those costs, you see your true profitability. You see your true margins, okay? One thing about processors that we work across the country with is that they want to know every cut that coming through that processing facility, okay? Well, if you have your farm that's raising the cattle, that's not a concern at that moment, but this processing is, okay? I'm going to use that as an example. We work a lot of process. They want to know, what is my value every cut coming off the animal? Okay? If I'm cutting T-bones, I'm cutting this, I'm cutting that. What is my value, but what is my cost associated to that? Okay? Now, what you're saying about cost, you're identifying the cost. That's one thing I saw when I left corporate America. My last position, I used to buy fragrance component worldwide for Revlon. Okay, I bought from every country around the country products. I knew every cost that I purchased for whatever country, because I had to know when I'm bringing land, sea, or rail. How do I land, sea, or air when the United States hit rail? What was that cost? Okay, what was that cost of each component? The cap, the bottle, the label. I had to know every cost associated with that. But when I got back to because my undergraduate degree is agribusiness, but when I came back and started working with my farmers across the country, no one knew the cost. No one understood the cost. I had a lady growing strawberries one day. She had a beautiful little basket, green little paper, a little bowl, and I asked her a question. I said, and she came out of the client, I said, what is your cost of this plastic? She said, I don't know. What does it cost you to bowl? I don't know. I said, you don't know what that plastic cost you? She said, no, how do I find that out? Take your cost divided by your quantity, that's your cost per piece. And that's the biggest thing our farmers across the country is not realizing. What's your name, sir?
Jack.
Mr. Jackson, what's your true cost? What is your true cost?
It moves because it's a commodity.
Absolutely.
That's what we've learned. It's even every animal, because every animal doesn't yield the same.
Absolutely. That's why I said they want to know the cost of those cuts and stuff, okay?
Yes.
All right.
It's an ongoing thing.
Okay.
How do you factor in your own labor hours? Like if you're not paying yourself, but can you write off your time? Is there a way that
You can't write off your time. You can charge your expenses and stuff to anything associated with your time in what you buy, expense out, that's a cost. But now we're gonna get into that because you said that right here on the next one. We want our farmers when you can to understand you need to pay yourself from your farm if you can. But you can't write the value of your time off, but you can write off anything that you utilize with your time. Okay, we get a lot of people say, I fix my own equipment, how do I write it off? Well, you can't really write your value off, the hours you said you pay yourself, but anything you use in fixing or repairing, that's tax deductible. That's why we encourage people, that's why we have a payroll department. We encourage our farmers to pay yourself.
That's just parts though, not labor, right?
No, that's what I'm saying. You can't write labor off if you didn't give yourself labor off. I was going to get to that. But we do encourage our farmers, if you can, pay yourself, if you can, and put it right back into the business. Why? Because when you pay yourself, the labor is 100% tax deduction, but when you pay yourself and put it back in the business, that money just became a loan back to the business that owes you that money back again. Yes, sir.
So do you need like a time card, like how I work at Walmart or something, or can you just do like a withdraw, or does there have to be paperwork involved in that
payment to yourself?
Okay, you don't want to do owner's draw, because we're getting ahead of it, that's great. You don't want to do owner's draw because anything over $600, you got to give yourself a 1099. If you give yourself a 1099 at the end of the year, you have to pay taxes on that. What you want to do is give yourself a wage. You're going to give yourself, we're getting a little ahead, you're going to give yourself Social Security, Medicare, and a lot of farmers miss unemployment. Because once you pay yourself from your entity on wages, you also qualify for unemployment. Okay? Now, one thing about wages in that aspect, when you pay yourself, your farm made $100,000, but you paid yourself $50,000, right? Guess what? You only have to spend some of the $50 because the $50,000 is a legal tax deduction that you already paid taxes on. Now, if you spend out $60,000 on your farm, when you go for your taxes, as we're doing this time of year, your adjusted gross income goes down to $25,000. Guess what? Possibly, here's your tax refund. But one thing about the $50,000 you paid yourself, and your farm lost $20,000, your tax income now is already only $30,000 because the $20,000 offset what you paid yourself from the farm. Here, again, your tax refund. You've already paid tax on that $50,000. It's adjusted gross income went down to 30. Because you've already paid on 50 for the whole entire year, you paid taxes on too much money because your adjusted gross income said you only had 30 left over. Here's your refund. But now that $50,000 is a 100% tax deduction to the farm. So you don't have to go ahead and worry about spending out the whole $100,000 because $50's already gone. Now
you're paying taxes.
You're paying taxes.
On that income.
Now, again, let me repeat this. I'm coming to you. You're paying taxes on the 50% because your entity is going to pay 7.5. You're going to pay agriculture a little differently, a little lower. You're going to be paying taxes, but we always tell people, let the entity pay the taxes, not you, because that's an expense to the entity. Because you only pay 50%, the entity pay the other 50%. We're going to get into that too as well, okay? Okay? The entity is what's going to pay the taxes, not you. Okay? Because when you give yourself a pay stub, people have W-2 income, right? You make $500 a week, but you're only going to bring home $450, right? Well, you, the employee, put 50% in, and the employee has to pay the other 50%. I don't want to get too confused here.
You're talking about the loans? You're talking about the money you put in?
The money you paid yourself from the entity, like you said, for my labor, but I paid myself. Don't do it in a draw, because now you're giving yourself a 1099 over $600. Pay yourself a legal wage because you're paying Social Security, Medicare, and unemployment. A lot of our farmers now, as we get in the next slide, are on wages now, because especially the spouses, because most farmers have everything in the spouse name because the farmer's not taking income. But we got spouse calls and thank you so much, thank you, because now we're showing farmers, because a lot of the next generation of farmers are getting on wages from their farm because they're watching mothers and fathers, and most of the fathers who've exited out of farming, knee hurt, back hurt, elbow hurt, but guess what? They can't get nothing because they never put that in. They never put anything in, Social Security, Medicare. So the young generation said, hold on, put me on payroll. But everyone thinks in agriculture, you got to pay yourself once a week, bi-weekly, bi-monthly, once a month. No, you don't. Or any business. No, you don't. You can pay yourself one time a year. That is your payroll for that year. Many of our farmers pay themselves one time a year or at harvest time. As long as you pay yourself, if you say, we have farmers come in literally pay themselves $100,000, $75,000, some different numbers, once a year. In a year, they're getting Social Security, Medicare, and they qualify for unemployment. Now they have a wage income. So when they go down to the banks, we don't like San Luis credit line, when they buy cars or personal things, here's my W-2. But a lot of times those farmers say, give me $50,000, pay my Social Security, Medicare, and unemployment, give me my check. Some say I put 3, some say put 4, bring a little more home, some say give me 0. But when you paid yourself that $50,000 and you put that money right back in your business bank account, you just paid yourself $50,000 and loan your business back $50,000. That is a legal tax deduction, repayment to shareholders' equity. You gotta pay yourself back. You don't have to be this year.
Are you confusing taking a draw against income as opposed to being an employee under sole proprietorship?
Now, when you say, am I confused in taking a draw? Let me explain that, okay? When you take a draw, what's your name, sir?
Jack.
Mr. Jack. When you go to the bank and you pull out a draw, right? You pull out $700. You got to give yourself a 1099 at the end of the year. Okay? At the end of the year, you got to pay one lump sum in taxes because you didn't pay tax for that money. Now, if you go to the bank every 2 weeks and pull out $200, in a year, you add it up, you get audited. The first thing they're going to say is, what are those draws? Well, I did this, I did that. But guess what? They're going to count that as income. That's a draw. Now, if you went to the bank and you file a payroll, we're on the ADP platform, we have a whole department that handles payroll, we have a whole floor, 2 floors that handle all agriculture. When you pay yourself, that's wages. A draw is 1099 draw. When you pay yourself, that's wages. There's a difference in contract labor or draw and wages. Wages is Social Security, Medicare, and unemployment. That's agricultural wages. Now, I'm jumping ahead. In agriculture, you file at 943. In ordinary income, you file at 941. 4 times a year versus 1 time a year.
What's that?
No, I'm asking, do you understand what I'm saying?
Yeah.
Now, you say I'm confusing what?
Well, my understanding is you could, under sole proprietorship, you can't declare yourself as an employee.
Why not?
I thought that was the rule under sole proprietorship.
Okay.
Because you're management, you're not an employee.
On the sole proprietorship, any money you make is yours. But you're forced to pay self-employment tax. So as a sole proprietorship, we have people come here all the time saying, give me wages from my sole proprietorship. It really don't matter. You can take the wages, yeah, you pay Social Security, you pay Medicare, but when you receive that $100,000 and you pay yourself $25,000, you still receive that whole $100,000. That's income to you.
So basically you're suggesting don't have a sole proprietorship, have a limited liability company because there's different ways to file the taxes.
We're going to get into that, yes, because as a entity, it can make $1 million. You didn't make a dime. You only made what you paid yourself. But as a sole proprietorship, you made a whole $100,000. It ain't gonna matter.
Right, and that's, I just wanted to share my experience
Yeah.
as a sole
We
proprietor.
get into that.
Started our
Yeah.
business.
Mhm.
And we had to.
An engineering business.
Yeah, not agriculture.
And we didn't have it.
Yeah, we just sole proprietorship, and it all goes right on your 1040. It goes right on your 1040.
Every bit of it.
Every single bit.
Yes, we changed it to.
And you have to pay that self-employment, which I think is like 20 or 30%.
Remember, I just mentioned self-employment
The
tax.
accountant adjusted it and made us a subchapter S, amended our return.
It received the money, not you. You didn't receive one dime.
Exactly right.
Just a
Exactly right.
paycheck.
You didn't receive one dime. We're ahead now. But the entity is going to receive. Remember I said earlier, it's not how much money you make, but who received the money. You don't want you to receive a dime. The entities receive the money, not you.
W-2 income.
You want W-2 income, not 1099. Anything over $600, you got to give yourself a 1099.
My 2 cents.
But if you paid yourself $50,000 wages and your company lost $40,000, it offset your wages now because your taxable income is on $10,000. Even though you paid yourself from the company, your farm lost money, it offset what you paid yourself. But on sole proprietorship, everything is yours. You're liable 100% of everything.
You'll probably get to
Plus.
this.
Yes.
S Corp versus LLC.
We get into all that.
Okay, so I'll wait.
Because people get that question all the time. S Corp versus LLC, they're the exact same thing. We're going to show you what I mean. Okay? I want you to ask, I love it.
I thought one could give you a salary, the other one gives you draws. But maybe I'm wrong.
No.
They can both do it.
Yeah, actually, the exact same thing. Yeah, the exact same thing. I'm explaining you why I say that very good, okay? Any more questions? Okay, any more questions? Corporate distribution program payment, agricultural program payments, commodity CC, crop insurance. A lot of people don't know, when you receive crop insurance proceed, if you're full qualifying factors, you don't have to report it that year you received it. You can defer it. You mentioned about your haying. You said, when I ran a drought, I had to go buy hay. That's what crop insurance is for, hay, because we give you a check to go buy hay. If you don't get enough rain, or you don't get enough rain on hay, and you can't reduce it, we give you a check to go buy hay. Okay? That's what PRF is about. Custom hire, other income and gross income. Ladies and gentlemen, this is the only way you report agricultural income. Remember that piece of paper called Schedule C? Had one line on it? This is the only way you report agricultural income. Okay? You itemize where it came from. You never put agricultural income on one line. Okay? All right? Now, here are your expenses, okay, to help reduce taxable income. Car and truck, chemicals, conservation expense. Everybody come to every year and say, if I receive a conservation expense, am I going to get a 1099? Yes. People come in with a 1099 and say, I got this 1099 for my conservation expense, but I don't want to report it because I don't want the IRS to know I got it. And we tell them, if it's in your hand, they already know you got it, okay? Well, we're going to show you how to legally reduce these conservation expenses. Because if you receive a conservation expense of $50,000 for fencing, and it costs you $49,000 to put the fence up, what is your taxable income? $1,000. Now, if you receive $50,000 for fencing, and it costs you $52,000 to put the fence up, what's your taxable income? Zero. Now you went back down to ARCS, they gave you another $1,000 for conservation expense. What is your taxable income? Perfect, zero. Now you went to ARCS, ARCS gave you another $900. What is your taxable income? Now you went back to another agriculture program payment, they gave you $201. What is your taxable income?
101.
$1. If my math is right, because you was already $2,000 negative. You got another $1,000, there's no taxable income. You got another $900, there's no taxable income. You got another $201 on the $1 because you still was $2,000 in the negative. There is no taxable income. Farmers come out, I don't want no more program payments because I don't want to pay taxes. Where's your expenses on the program? Program payments were paid to you for you to perform a program. You have to use that as a legal tax deduction. And another big mistake that people make, go ahead. In July, you got $50,000 for fencing. And the first thing most people say, I got to go now and start looking for expenses to reduce that $50,000. Right? From July on ahead. Wrong. Because your fiscal year started in January 1st. So if you've already spent $51,000 from January to July, you receive $50,000 in payment, there is no taxable income. Because you already spent $51,000 from January 1st.
Okay, so like if we got the fencing, do I have to keep like the records separate? Like, I don't know, I guess that's in case I got audited or something.
Yes.
But do I have to keep those records separate? Like, here's the fencing bill and here's the labor
Yes.
bill and here, okay.
Yes, because you never want to co-mingle funds. You never want to put your farm, your business income into your personal income. You always want a separate account.
Okay, so I do keep them separate, so just trying to apply this to myself here. I use QuickBooks to do all that, and I actually do all the bookkeeping for them. So I'm trying to figure out like how to like categorize stuff, so it's super easy. Do I need to like, you know, so like everything's, you know, going through QuickBooks, do I keep like, do I make a separate category that's for the conservation expenses?
The most quickest and easy way, you say, I'm jumping one slide ahead. If my mouse will work here. The quickest and easy way, man, to be honest with you, is to, we get ahead. Go to your Schedule F. Go to your Schedule F.
But she's using QuickBooks for her accounting.
But see, QuickBooks doesn't now. We have our firm, get this work, I need to work back. Our firm, we use QuickBooks. We use a commercial version of QuickBooks, our firm. We have a whole division. That's all they do, a whole department. That's all they do is keep up all of our farmers' financials, okay? They keep up with our farmers, we're a little ahead now. We keep up all of our farmers' financials, okay? We keep up with the profit and loss, balance sheet, cash flow, trial balance, general ledger. And we all categorize everything. We have a whole department and a whole division, that's all they do. All day long, categorize for our
Do
farmers.
your farms use QuickBooks as their accounting
Yes.
system, and then you guys remote into them and set the categories?
We don't remote into them, everything downloads to us. It just downloads to us, okay? We tried that before, but what happened was, anytime you go in there, when you wake up in the middle of the night, and you decided that something's not categorized right, you want to change something, then we come back for reconciliation, your reconciliation off, the first thing you say is our fault. That's why we stop doing that. You touched it, so we don't do that, but we do have limited access in which what we do. But that is the biggest, that's the most efficient way. Now, going back to the next slide, is it working? Going back to the next slide, guys. This is your categories right here, man. This right here is your categories. Okay? So, you look at your categories, controversial expense, custom hire, depreciation. That's one thing a lot of farmers miss now. Because you capture your capital expenditures, anything over $10,000, they want to say, I always want to say that you recapture that through depreciation. But one thing about depreciation real quickly now, depreciation is the best way to reduce taxable income. But it's an add back. Meaning, this is for example, don't work like this now, okay? You bought a tractor for $50,000. For the next 10 years, you're going to take a $10,000 depreciation. You're going to have a depreciation expense for the next year of $10,000. Now, again, don't worry like this, okay? Always go down. But when you take that depreciation, that is an add back. It reduces your taxable income. But if you say my farm made $10,000, but I got $30,000 depreciation, my farm made $40,000. But if my farm lost $10,000 and I had $30,000 depreciation, my farm actually made $20,000. Because you add depreciation back in. Depreciation interest is the first two things any institution asks for. What was your depreciation and interest? That's an add back. Okay? Have a farm, buy equipment, because our farm is separate. Because if we have farmers, we have a farm, but they have trucks and equipment in a separate entity. Because they lease the equipment to the farm. Because both don't have debt. Okay, I'll explain it a little later, okay? We're beginning to say, okay? So, what they did was they wanted to buy more trucks. So they had $38,000 on the bottom line. But they didn't qualify. But once we went in and did all the depreciation, they had $171,000 in depreciation. You add that back in, they qualify. If you add $38,000 and $171,000, now you're over $20,000 in gain. Depreciation reduces the taxable income, but you add back depreciation. You want to capture depreciation. It adds more value to your balance sheet because you have a detailed inventory list. You have a detailed list of your inventory. And a lot of people say, well, I didn't know what's on my farm, what kind of equipment's on my farm. Go to your tax return or your schedule, and list every asset on your farm. That's why we encourage great record keeping, because depreciation, a lot of our farmers miss depreciation. You want to reduce your income, but you add depreciation back. Okay? We come at it.
Can we have a copy of your PowerPoint?
Yes. We're going to we upgrade, but we'll get you a copy of it. Employee benefits. Here's your category, man. Feed, fertilizer and lime, freight trucking, gas and fuel oil, insurance, mortgage interest, other interest, labor hire, right there. There's a difference in labor hired versus wages. We're gonna come at it, okay? Labor hire, pension profit sharing, rent lease, vehicle, machinery, and equipment, land and animals, repair and maintenance, season plant, storage and warehousing, supplies. I want to start it real quick. We get a lot of people we can't speak to IRS, but audits are done randomly, okay? But you sure can spot one. If you said, I made $100,000 in growing tomatoes. I got $100,000 of income, but $90,000 in supplies. That would make sense. Why? Because where's the seeds? Where's the fertilizer? Where's all the other items associated with that? Because that's called a catch-all line. Don't like catch-all lines. That means you dump everything in one line and say, oh, this is my expense. You always want to itemize your legal tax deductions. Okay? So many people come to the office every year and say, so-and-so said they're going to hook me up. They come to the office and hook up, we can't get them on hook sometimes. You don't have to get hooked up because here are your legal tax deductions. Taxes, utilities, veterinary breeding medicine. People ask me all the time, can I ride with my dog? No. Unless it's a service animal. If that animal serves a purpose, we heard a lot of ranchers in Texas who use herd dogs. That is a legal tax deduction. That's a working service animal, okay? And then one thing here called wages. We already went through that. As long as, if you can, pay yourself from your incident. We do not recommend draws, okay? Now you gotta pay self-employment tax. Now anything over $600, you gotta give yourself a 1099. Now, if you keep taking $200 a week, $300 a week, if you're audited, and you can't justify that cash distribution, they're going to say that is your taxable income. Now we're going to report to you as taxable income to you. Here's your 1099, we're going to make you happy, and now it's your self-employment tax. Does that make sense? Is that correct? You're going to be reported as 1099. So we ask people, take the wage where all possible, okay? Take the wage, not the draw. Okay? Because you don't give yourself 1099. Okay? These are all your legal tax deductions. And here is the only form that you use. If I'm doing something wrong, another clock. If I'm doing something wrong, let's see. And the only form you use is Schedule F. In any agricultural operation, this is the only form you use is Schedule F. But here's the problem that farmers have with Schedule F. They're putting their income on the wrong line. And one of the lines that farmers are putting the wrong income on is this line right here. Everyone says, my account said put on the first line. I put $100,000 on the first line. Guess what? The first line is the difference of 1A, 1B. That is a resale income. You put it on line 2 where it says production income. The second thing people do, they come and put all the income on the right side. Look at this form. If you receive an agricultural subsidy program payment of $50,000 and it's not taxable, you put the $50,000 in 4A, but what is the taxable amount? 0. There's no taxable amount. If you receive a program for $50,000 and only $10,000 is taxable, you put I received 50, but only taxable amount is only 10. Schedule C don't offer you that, do it. Yes, sir.
If I'm applying for a grant, like a federal grant or a state grant, should I apply for it with my name, you know, as like the contact, and they would pay me, or should I put the LLC's name as the
LLC name, because then we get the next part, because you are going to receive the money, not the LLC. You don't want to receive no money. You want your entity to receive the money, because all money comes to you is going to be taxable by you as a sole proprietorship.
And when there are two non-related people who are running a farm together, how does that work?
They're going to get a K-1 form from the entity. They don't get money. Who receives the money? The entity receives the money. Now you, as we get in here, the two people they're going to get, what are they going to get? The percentage of ownership through a K-1 form.
Shareholder distribution.
There you go. Through the K-1. Yes, ma'am.
Okay, so I've been my husband and I go back and forth on oh, we have to show some profit or we're going to get audited. Is it causing flags to go up if every year? I know it's common for farmers not to make money, but is there some like just to ease my nerves.
We get that question
Show income.
all the time.
Okay.
Long as you showing you're operating in good farm business practices and you can afford it.
Okay.
A lot of people say to themselves that, and I was saying, we get the question all the time. If I write off 3 years of losses, I'm going to be counted as a hobby. No, you're not technically. You as a hobby, you still can write for the deduction as a hobby up only to the amount you made on your hobby. But long as you're showing good farm practice and record keeping, you can operate with the loss. Okay? Now, let me repeat this now. Don't come and say you lost $100,000, but I only made $10,000 for the last 2 years. Now, you have an entity. Now you can borrow $100,000 now, as long as you're showing that funds have been deposited into your account, and you can afford that loss. Now, if they audit you, they're going to receive all the receipt, as long as you can show good business practices and you can afford those losses. A lot of people take money from their personal W-2 income. Now they know it's a loan to them, okay? Don't go ahead and create nothing. We have farmers come in, oh, I got this farm, I have a $400,000 loss, but I only made $50,000. How do you get a $400,000 loss if you only made $50,000? But people don't realize too now, when you come in and saying, I have a $400,000 loss, you just took back your possible refund. Because you get an earned income credit. We tell people from sole proprietorships and Schedule Fs and all that, don't come in here saying, I have a $50,000 loss when I have W-2 income, because guess what? People don't understand, a refund peaks. It's gonna stop. You can put 20,000 or you can put 50,000, you ain't get no more money. But when you start putting 35, 40, that refund goes down. Because I already said, I gave you earned income credit, but you showing this big loss, I ain't gotta give you no earned income credit. People lose money by putting too many expenses way above. That's what I'm trying to say. Long way around, but long as you can show them good farm and business practices, we get this question all the time. And then people say it, as long as you can afford it.
This is a hypothetical, but is it possible under a sole proprietorship or LLC or subchapter S or whatever else, instead of appreciating equipment that you purchase, can you lease it back to yourself?
Yes, you can lease it back to yourself, but, okay, yes and no. Yes, I'm gonna say this yes, Rob. You purchase equipment, but you want to carry that expense, okay? But now, what most people do, what's your name, sir?
Jack.
Mr. Jack. What most people do, when the depreciation runs out, then they lease it back to themselves.
But if you use depreciation, you still have to recapture that at a certain point, right?
If you sell it, yes, you do. If you was,
have to recapture at least.
no, you don't have to recapture a lease, but you want to recapture that cost. Because remember now, when you spend that $100,000 on equipment, you want to take that cost as an expense. I wouldn't lease it to myself right then, me personally, because if you lease it, you bought a $100,000 tractor. But what I just said earlier, what most farmers do, they bought the $100,000 tractor, they bought it in the equipment entity. It carries depreciation, and they lease it from that entity to their farm. That's the way to do it. You buy the tractor in your, what's your name one time, sir?
Jack.
Mr. Jack? Yeah. I'm remember Mr. Jack. Mr. Jack Farm Equipment. Mr. Jack, he just said, can I lease it myself? So the best way, Mr. Jack, we would recommend, our firm recommend you, is let your Mr. Jack Farm Equipment buy the tractor and lease it to your farm. You own the equipment, you own this entity and this entity. Remember I said earlier, a lot of our farmers put their equipment in one entity and lease it back to their farm. Why? Number one, if you go down the road and you have an accident, you can't sue for the farm. You can only sue for the equipment in it. But the biggest advantage is because if you bought this piece of equipment and you're paying $10,000 a month in payment. But you lease it to the farm for $11,000 a month. You just offset that debt because you're bringing more in than going out. Now, the farm, the reason at least in the farm is not carrying that $100,000 debt on its balance sheet. It's leasing. It don't have any debt because it don't have no equipment debt. Because this equipment in the entity is carrying debt, but it don't have no debt because it's leasing out more than coming in, more than going out. So at any time, Mr. Jack, you keep buying tractors because now it don't have any debt. The farm is not carrying no debt because it don't own the equipment. So the farm will go down the street, you may have an accident for liability, the farm get litigated, there's no equipment for it to get because they don't own anything.
Do you want to do the same thing with land in terms of, as a separate asset, let's say lease it to the ranch?
A lot of people lease their land to a ranch, not only because of the leasing person, what Mr. Jack talked about, but for protection. Because if I come on your ranch and I get hurt, I can only sue you what the ranch owns. But the ranch don't own the land. The ranch don't own the land. A lot of people separate it because we've had farmers going to financial distress on buildings and stuff they put on the land. But if the land is not collateralized, as long as the land is separate, it is not up for litigation because the farm don't own the land. Now in North Carolina, a lot of people do put land in their personal name and lease it to the farm because the laws in North Carolina is if a spouse owes a debt, both spouses have to be on the debt for you to get the land. So that's why a lot of times people lease the land in one spouse's name, put the land in one spouse's name, not the other spouse, because you can't get that land if both spouses are not on the debt. Certain states have different laws now. I'm not saying laws in New Mexico. Now Mississippi, don't even think about any laws. There's some crazy laws. A lot of southern states, but you got to know those laws. But sir, a lot of our business owners and agriculture always separate land and dwell from a separate deed. You can't make them on land. You can't get them on land. You can always build another house. Again, this is all about asset protection, not only taxation. Can I ask you a question, sir? That would be our recommendation for leasing equipment to the farm. Let the entity buy the equipment, so now you're taking a lease and depreciation. Okay? Lease and depreciation. And it separates your liability. Now we're going to get into the instruction next, okay? Now, we're going to see exactly what I mean. Here's all your Schedule F's right here, and you always want to use, you ask that question, here's your deduction right here, okay? Here's your categorization right here. A lot of people ask me all the time, and we want to tell people, a lot of people try to reinvent the wheel, okay? We get this question all the time. How do I need a budget. How do I do a budget? I spent 6 months trying to do a budget. I spent 3 weeks trying to do a budget. I spent a month trying to do a budget. Can anyone tell me the quickest way to do a budget?
Look at last year's expenses and incomes. Check.
Listen, what's your name, sir?
Pat.
I'm going to give us a prize for at least today. No one can tell us that because when people say, I want a budget for last year, take your categorization, divide it by 12, that's your budget. That is your budget. Take your expense from last year, divide it by 12. So if I had $12,000 in chemicals, in June, I say July, May, so I can, March, so I can remember earlier, I was at $2,800. What does that mean? I'm what? Under budget. Because $1,000 a month times 12. Now, in March, if I already spent $4,000 in chemicals, I'm what? Over budgeted. The quickest and simplest way to do your budget for the next year is divide your last year category by 12, but take into consideration, you categorize best of your ability. That's your budget for next year. Because in most agricultural operations, you always use the same thing. Now, in financials, just quick reference financials. If you say I spent $50,000 in chemicals last year, but I know that's a one-time expense, you can put that money in another budget somewhere else. Okay? You can still categorize it, but you know you can move that money to another line. Why? Because you know you're not going to have that expense. And when you go to any financial institution, that's called a what? A one-time expense. That's called add back. So when you say my negative line here is $50,000, oh, that's a one-time expense. I won't have to normally add that back to your budget because you're not going to have that next year. A lot of people go through remodeling, renovation. You're not going to have that next year, so you add that back to your budget. Okay, all right. This is the only form you use in Schedule F. Okay.
Sorry, where does the add back go on the forms?
On your when they say add back, that means when you're doing your financials, you add that back. That means they're going to add it back to a budget. When I say add back, well, add backs comes to depreciation when you said my farm lost $10,000, but my depreciation is $50,000, my farm made $40,000. Financial institution adds that back. You're going to still see it on your financials, but you're going to know that's an add back to when they start doing your financial, when you're looking for loans, and we like the word credit line instead of loan. When you look for give you operating line of credit or loan, they add that back to your financials. That's what we call an add back. Institution normally add that back. Okay? All right? Now, a W-9, real quickly, okay? A W-9 is, how many people have filled out a W-9? Okay? We ask that question. We tell people, never put your name or social security number as W-9. Okay? One, this says social security number or EIN number. That don't say and. Okay? The reason you want to hear it, this says name of entity or / individual. Okay? So if your EIN number has ABC Farms on it, that's what goes on here. The purpose of this right here is because they want to know, are you individual, C Corp, S Corp? Why? One of the reasons why is because they want to know who they're paying it to, or if they're paying it to an entity, and only people that are required to get a 1099 are individuals who make over $600. A corporation or entity is not required to give another entity a 1099. That's one of the reasons I asked you what you are, because only person that's required to get a 1099 is anybody that receives over $600. An entity is not required to give another entity a 1099. An entity is not required to give another entity a 1099. Okay?
So if an entity is paying another entity,
you don't have to give it a 1099. And this W-9 reflects what you are.
so then does the entity receiving the money still have to
Absolutely. You have to report it now.
report it, but you don't have
You don't have to file it. You don't have to do a 1099. Another entity, corporation is not required to give another corporation a 1099. That's not required now. Okay?
So this is like the meat, like the rancher, and then his packaging or his processing, and then his.
Exactly.
Like he doesn't have to tell his other business, he doesn't have to give his other.
He don't have to give his other entities a 1099.
Okay.
He just have to record the transaction.
Okay.
That's the purpose, and that's one of the reasons, because he don't have to give his other entity a 1099. Okay?
Did the Citizens United Declaration and the Supreme Court change anything with 1099?
Now, I'm not a lawyer. Now, I got attorneys in our firm. Now, I cannot say, I know one time, now, my limited, that's why we have attorneys, my limited knowledge is that they were trying to raise that threshold from 600 to 900 at one time. Okay? Now, I can't say the citizen in the Supreme Court, but at one time, they were trying to raise that threshold from 6 to 9. As far as I know now, sir, it's still $600. Okay? I mean, do you know anything?
No, the only thing I was concerned about was that under Citizens United, that corporations now are treated as individuals.
Mm-hmm.
So does that change the 1099 report?
Now, when you say Citizens United, I think that's the other artist.
Supreme Court determination.
Mm-hmm.
It came about prior to COVID.
Mm-hmm.
But it was a determination that corporations now have the same rights as an individual.
Mm-hmm. From my understanding, sir, with our firm, it turns out we work with our firm, we still don't have the required to give them 1099. Now, that's something I can pick up the phone, we make sure we talk to attorneys about. We do have tax attorneys with our firm, We are talking to them about that, but from my understanding now, we're still giving anybody over 60, it was trying to raise it to 900 at one time. From what we know now, we still give 1099 only to individuals. Okay? All right? But we can get them to check with it, okay? All right. And we're not giving the right information now, okay? And a lot of times now, with me, I might feel as I have a whole department that have a lot of taxation, so a lot of times I sit down and refer all the new laws and stuff coming through our tax system, okay? All right? All right, but we will follow that. All right? Okay? Now, but the biggest mistake that a lot of our farmers make, they put their name and their social security number on this piece of paper. And we see that still today now. From my understanding now, people with that on it, they get a 1099. They give 1099s, okay? That was an issue recently with our, I don't know, maybe farmers got the discrimination payments, the DFAP payments and stuff. A lot of our farmers got it in their social security number and not their name, and not their entity numbers, okay? That was a big issue now, because a lot of payments went to their names, and they want to go to the entities. When they applied for it, it went to the entities. But USDA said they had too many entities coming in, so they won't get issued to the farm. So that's still a big, that may be an issue that they need to go there, because they issued these 1099s for $500,000, $200,000 or $300,000 in the farmer's name. And farmers apply for it in their entity names, okay? All right, okay. All right, this is a W-9 form. Now, 4835, this is a quick form, farm rental income, people who are renting land. A lot of people still use Schedule F, okay? Now, we're gonna get into the entity structures right now, okay? Now, do y'all want to continue? You want to take a quick break or something? You want to continue? We're going to be wrapping up in the entity structure at the end, okay? We keep going in. Now, one of the things that we're doing here, she said, this is what we just identified as 5 financial statements, okay? Profit loss, balance sheet, cash flow, tribal journal ledger. Profit loss, absolutely crucially important, okay? Because this is your, for the second time, income statement that details income expenses. But this is your tax return, okay? This is your tax return. One thing about this is all your income and expenses. But what a lot of our farmers make a mistake is, they add up every deposit they make for that year as taxable income. Ladies and gentlemen, if you are borrowing money, equity lines, loan money, that is not taxable. The only monies that are taxable is earned income. Now that is a problem across the United States and the territories. Farmers say, I borrowed $500 from my brother, I borrowed $10,000 from my equity line, they put it on a tax return, they come in our offices and stuff, we add up all their deposits, but if you put $10,000 in a deposit, but only $2,000 made from selling cattle, the only income you put on the tax return is the $2,000, not the borrowed or transferred funds. Many of our farmers are paying taxes they don't owe. Okay? Because you added up all the money you deposit, only the money you earn money on is taxable. Okay? All right.
So grant income?
Grant income possibly is taxable. That's taxable. Okay? Well, we talk about a lot of people borrow money, transfer money, sold a piece of equipment. Okay? All right?
You sell a piece of equipment?
Yeah, it's according again now, what is taxable and not taxable. Okay? All right?
Drought insurance is taxable.
Yes, because you're going to get a 1099 on drought insurance, okay? Yeah, you're going to get a 1099 on drought insurance, okay? Because what kind of drought insurance you have?
For rain,
For rain, yeah? Okay, yeah, you're going to get that, okay? That's taxable. Now, the balance sheet, remember this two things, is what a company owns or owes. But the biggest thing I remember, as well, the amount invested by the shareholders. The amount invested by the shareholders, okay? Meaning, remember I said that piece of paper? If you put $10,000 in your company, right? What is that? A loan. Okay? Because that's not taxable income. And you're repaying the shareholders equity, that goes on your what? Your balance sheet. The next mistake a lot of people make, they take their balance sheet of they buy a piece of equipment, and you pay $1,000 a month on that piece of equipment, correct? Elacor, can you check this right? You pay $1,000 on that piece of equipment, right? Many people put that monthly payment on their P&L. You do not put those monthly payments on your profit and loss. That goes on the balance sheet. When you make that payment, it reduces your liability, increase your asset. When you have company cars, we're going to talk real quick, company vehicles, Do not put those monthly payments on a profit and loss statement. That is on your balance sheet. When you make that payment, it reduces your liability, increases your asset. A lot of people put monthly payments, like cars, on the back on a P&L statement. That goes on your balance sheet. Okay? You do not put monthly payments on a P&L. Okay? Because you're saying on your profit and loss statement up front, I got $10,000, I got $3,000, but I have to pay a $4,200 car payment. I'm negative. But a $4,200 car payment should never be on a P&L. It goes on your balance sheet. That's why you put your equipment on your balance sheet. Okay? All right? Now, this is what you own. This is simple. What you own or owe, but you keep up with what you put in that company on your balance sheet. Okay? That's repayment share rate. Okay? Real quickly, cash flow statement. How my cash flowing? Okay? This is how our cash flow statement looks. Real quickly, trial balances. This is just a balance between all your debits and credits. But one thing a lot of people miss is also. Okay, this is more crazy a little bit. Okay, go back. Go back. Okay. Go back. Okay, you're right here. Right. This is your general ledger. Okay? If you say I had $20,000 in fuel on your P&L, just open the P&L. It tells you from January 1st to December 31st, every day of the year, what you spent was in that P&L. Okay? Get you a complete categorization of general ledger. That's your general ledger. Okay? Now, disregard the answer, I'm going to read it very quickly. We're going to talk about pass-throughs. Now I'm going to get into these entities, okay? Next one, I won't read it for sake of time. Partnership, this is called a general partnership, 2 or more individuals, okay? Remember that EIN number? You said a general partnership? Now, that's called a general partnership. That it's very easy to organize, identify strength. But one thing about general partnership, we just came out of conference, a lot of our attorneys and stuff in Nashville last week. One thing about a partnership, we always tell people, the reason we don't recommend general partnership, because liability can drill down to the partners, okay? In most states, if one partner in a general partnership does something wrong, some states, it could affect all the other partners. So that's why on a 1065, it opens each individual up for liability. Well, as we're going to tell you, we're going to tell you how to close that liability. This is a general partnership, a 1065 partnership, okay? Now, next. This is the form you're going to fill out. A 1065, you're still going to attach the Schedule F. Next slide. You and your husband is going to get, if you're 50-50, we're going to talk about that too, a K1 form from the general partnership. The only entities that issue a K1 form is a 1065 or an S corporation. That's the only two that issue K1 forms. You cannot fill your personal tax return. You ask that question, ma'am, my partners, you're going to get a K1 form. But here's what we recommend. Next slide, please, okay? Here's what we recommend. Now we're going to talk about these entities and organizations. Won't read everything. If you go down to your Secretary of State and you file articles of organization, you're now applying for an LLC. If you file articles of incorporation, you're now applying for a corporation in the state that you're in the state of New Mexico. But the reason a lot of people apply for the limited liability companies because an LLC is not a corporation. It's an organization of a group of people. But if you apply for articles of incorporation, you now got to operate under the laws of the state of New Mexico, corporate laws. A limited liability company avoids a lot of those state laws because it's an organization of a group of people. An LLC is not a corporation. It's an organization of a group of people. Okay? But remember what I'm saying now. We're going to get closer, okay? But now, next slide, please, okay? Limited liability companies has some characteristics of a corporation and some as a partnership, okay? LLCs are organized about double taxation. What do you mean double taxation? S corporation doesn't pay taxes. C corporation pays taxes, and when you do payroll taxes, that's double taxation. It pays payroll and corporate tax. LLCs don't, S corporations don't because S corporations don't pay taxes, okay? Owners of LLCs are called members of management. Me and Mr. Jack, we formed this LLC, but Mr. Jack says, guess what? I'm going to manage this company. We just became a management LLC. But if I say, wait a minute, Mr. Jack, we both going to make decisions. We just became a member managed LLC. Okay? If your distinction is determined, if you're going to say I'm a manager, or everybody gonna make a decision you became a member. But the problem that people have with LLCs is this. Next slide. The problem that people have with LLCs, next slide, is people don't know an LLC can choose to file as a sole proprietorship, partner, or be taxed as S corporation, 3 ways. Okay? Okay? S corporation can't be owned by a corporation, can't be treated as a partnership. Earnings may be subject to self-employment tax if you're a sole proprietorship, and life is limited. Now, you ask that question, how do I determine what type of entity I am? You remember that thing called an EIN number? You remember that? What's your name, sir, one time?
Lucas.
And what's your name, ma'am?
Jessica.
Miss Jessica Lucas, okay? When that thing gonna ask you, are you a single member LLC or multi-member? What did you check?
Multi-member.
Like if it was a one person, just you, what would you check? Sole proprietorship, single member. If you had 2 or more people, all 3 of us in this entity, you apply for EIN number and ask you, are you a multi-member? What would you check? Multi-member. There's nothing wrong with that. But we just messed ourselves up. Why? Because when you check your single member LLC, you just told IRS I'll be taxed as a sole proprietorship. When you check that you're a multi-member LLC, you just told IRS I'll be taxed as a 1065 partnership. You should have checked the box corporation. And when, next slide, when you check the box corporation, it's going to tell you got 75 days to fill this form I call it 2553. I'm going to jump a little ahead. Go ahead to the letter. One more. You see right here, a lot of people miss this. If the LLC is eligible to be treated as a corporation and be certain as a corporation, it was time to file a 2553. No one reads that letter. It's in your letter too. No one reads that letter. Go back 2 slides. Because the letter clearly tells you, you have to file this 2553 within 75 days. Okay? If you don't, you're going to be denied. Unless you right across the top of it, you pencil, crayon, blood and ink, pursuing revenue procedure 2013-30. Filing Rev Proc 2013-30. That's your late filing revenue procedure. Okay? Now, one thing about entity, real quickly, next slide please. This tells who owns this entity. You ask that question. Who owns this entity? Okay? Now, if you want somebody to own 75% and somebody to own 25%, the person with the control interest owns it. Okay? Every year we have families coming in trying to bring the next generation back in. Because now children are calling and say, wait a minute, you mean to tell me I can stay in New York, I can stay in California, I can make $200,000, but I can own a percentage of the farm at home? Absolutely. So you mean to tell me that $200,000 make if dad lost $50,000 back home, that I can offset my personal income by my ownership? I own 50%. So you mean to tell me I can offset my $200,000 by a $25,000 loan? Yes. So you mean to tell me I can stay in California and loan my mom and dad money to my entity, and when they start making money, I get that money back? Yes. Because now you own an entity and you're not a sole proprietorship. Now we're talking agribusiness. Because see, now we always say, we say every year, moms and dads, moms always said, dad say, no, which child he want to have this down to. Because dad gonna say, that other one ain't gonna do right. But mom gonna say, I talked to both of all my kids, and they say they're gonna do right if something happens. We tell mom, no they're not, mom. They ain't gonna do right. So we want you to understand, this is how you control the ownership of your entity. But the persons or personas with controlling interest, they control the LLC. Another thing about this LLC, many of our farmers are veterans. Thank you for anybody who's a veteran, thank you for your service. Many of our farmers have limitations on what they can receive. Guess what? This can receive $1 million. You didn't make one dime. It received the money, not you. It has a liability, not you. That's why you want to pay yourself from this, because some people say, I can only make $1,100 a month. Guess what? Pay yourself $1,000 a month for this, and you're fine. But now you remember, you're going to get a K-1 form. We get a question all the time. People say, husband or wife, should I start 50-50? We tell them, if you love each other, you ain't going nowhere, put it in one person's name. But if you have doubts, now you might want to put it in 2. Because you're going to protect the spouse. The entity is receiving the money, not you. The entity is carrying the liability, not you. This entity is buying equipment, not you. This entity is leasing it to the other equipment, another entity, to the farm, not you. This entity is processing the beef, not you. This entity is selling it to the other entity, not you. No farmer in here, after they should work together as farmer to farmer, entity to entity. Entity to entity, not farm to farm. Next slide, please. Now, next slide. One thing we want to show you. Double taxation is avoided. S corporation doesn't pay the taxes. This entity made $10,000, this entity lost $10. There's no tax because they offset each other, okay? But one thing about this is entities. Go to the next slide, please, okay? This is where you file your 1120S tax as a corporation because your LLC filing requirement is an S corporation. The LLC and the IC is your state filing, your state articles of organization. You have an LLC in the state of New Mexico, but the EIN number tells it it's an S corporation now. That's why they're the same, because all you're doing is when you apply for your EIN number, you check that box corporation. Now the EIN number is taking this LLC and taxing it as an S corporation. Now, this entity bought the car, not you. This entity bought the equipment, not you. If you say, I got a problem with this entity, right? A lot of people operate sole proprietorship. You got a problem, you buy the car, it's your name, correct? Your social security number, correct? Not with an entity. Now you got a problem with this entity here. You got a problem with you personally, and nothing you can do about it. Credit score gonna go down, best gonna go, you got all kind of problems because everything is in my head. But this entity is borrowing the money, not you. This entity bought the equipment, not you. So when you have a problem with this entity, guess what? You got a problem with you, you're gonna want to pray. But if you got a problem with the entity, what do? Check that box right there, say file return, shut that entity down, you scroll the entity and the EIN number down, all you gotta do is transfer the asset. You got ABC forms number 1, so you start ABC forms number 2, transfer the assets of ABC number 1, transfer to ABC number 2, because that EIN number don't have debt. This EIN number had debt, but you just shut that EIN number down and the entity is shut down. You can't shut yourself down, but you can check that box, say file and return, shut it down, and start another one. Start another one, then shut that one down. Because now you still got a whole year to expense out the deductions.
Okay, so, my mother-in-law used to be more involved in the farm, and she's not anymore, which is what made us go from no partnership to sole. So should I just, are you suggesting that you get a new EIN whenever you change your?
You don't have to get a new EIN number. You're changing the filing requirements of the EIN number. You don't let, now the EIN number department, sometimes they issue you a new EIN number, but it's going to be tied to your old EIN number. A lot of people go out and apply for new EIN numbers. No. What we're doing, we are changing the filing requirements of the EIN number. But you said that your in-laws, I said right, was a part, you went, so no, you want to now go from a sole proprietorship or partnership to a S corporation. One thing about S corporation, the 1065 can drill down to the owner. Well, with an S corporation, you close that shield. It can't penetrate the corporation. 1065 can get to each individual. Corporation, it can't pierce the veil. That's why you want to be an S corporation, because you close that gap where it can't come through. Because it carries the liability, not you. It borrowed the money, not you. It sold the cattle, not you. It bought the cattle, not you. Yes, sir.
So, but why do you need to tell me which is better, LLC or the S corp? You're saying
LLC is only the state formation. We're taking what you did at the state, and when you apply for your EIN number, we're saying we're going to tax that EIN number to my LLC, but I'm going to be taxed as an S corporation. The LLC is only your state formation. And most people do LLCs, articles of organization, instead of articles of incorporation. You remember when Enron and Adelphi, you remember when Lay, before he died, he scared to say, Lay knew everything he was doing? Lay said, no, I didn't. So they said, wait a minute, how can you be an officer of an LLC, the president, the vice president, secretary, and you don't know what each other's going on? So that's where Congress came up with, hey, I'm in Washington, D.C., I want all this money, assets at home. I better form a limited liability company because now I have limited liability. That's what LLCs came from. When all these corporations says, the president, vice president, I didn't know what was going on, they say you cannot be an officer of a corporation and you don't know what's going on. You all carry liability as officers. Hold on. This is creating these LLCs, which have members and managers. So now that's what articles of organization came from, because now it's called limited liability of the members or managers. That's why LLCs don't go by your state corporate laws, because it's not a corporation. It's an organization of a group of people. But your EIN number determines your tax filing requirements. Got that? The LLC is just your state formation. So now, New Mexico says, what's your name of your company, sir? Pat. Pat, Mr. Pat LLC is registered with the state of New Mexico. That's all. That's all it's saying. Now you saying, wait a minute, I'm going to take this LLC that I'm going to form as a business, I need an EIN number. Guess what? Now you told the federal that I want my LLC to be taxed as an S corporation. Now I'm going to file an 1120S. Now, if you check that box, say single LLC, you're a sole proprietorship. If you check the box, say a partnership, you're a 1065 LLC. But you, Mr. Pack, want to be an S corporation. You want your LLC to be an S corporation. Yes, sir.
Thank you. So I listened to a podcast regarding, forming LLCs and such. One of the things they said was, that was interesting, is there's certain requirements as this corporation that you do yearly, that unless you follow those rules for things like you gotta have, shareholder meetings, you have to have minutes, you have to have basically the records associated with the corporation, that if you're not compliant, the term they used was somebody that's coming after you wanting to sue you can pierce the veil because you have not provided, your due diligence as a corporation.
Now, yes and no, but yes. But what I'm saying to you, LLCs have operating agreements. Incorporation have bylaws. Repeat that. LLCs has an operating agreement. Yes, you're supposed to have your annual meetings. Yes, you're supposed to have all your stuff. You do. But a lot of them tell people it's internal. Okay, if you're going to fight against each other, somebody's going to sue you or litigate you. They're litigating the LLC. So yes, you want to say, all right, one thing about LLC, remember now, most states, LLCs can have one member. 1065 has to have 2 or more. Okay? A limited liability company can have 1 member. Most states can have 1. You could be, remember, LLCs don't have officers. LLCs have members and managers. Incorporations has to have a president, vice president, a secretary and treasurer. Those are corporate officers. LLCs, there's no officers. Now, a lot of people do, I do sometimes with the CEO, a lot of people say it, but LLCs do not have officers. They have members or managers. If you file articles of incorporation, you have to list an officer. So you have to have your bylaws. But as an LLC, you still want to have your operating agreement. Okay?
So if you're, again, going the route like you recommend of an S corp,
yes,
then you have to have officers and bylaws. Is that true?
If you're a corporation, yes, you have to have bylaws, officers. If you're LLC, you have to have operating agreements and your members.
But if you're an LLC who is filing as an S corp, right, which is what you recommend,
I recommend that.
then you have to have officers and bylaws.
You don't have to have officers.
No, not for
No,
that type of S corp.
listen, LLCs do not have officers.
Right.
But you have to have an operating agreement. Incorporations have to have bylaws and officers. See, it's two different things now.
So you're filing to pay taxes as an S corp, as if you're an LLC and you file to pay, to be taxed like an S corp.
Yes.
You don't have to create.
You're not a corporation.
You're not a corporation.
No.
Okay.
So which one?
However, I wanted to build a question off of that. If I understand it correctly, the LLC is the state
Yes.
designation,
Yes.
and the
I already know you
S corp
exist.
is federal.
There you go.
So wouldn't you have to do both of those regimens, you know, have your okay, so clarify that for me, please.
Okay, let me throw a little wrench in this now. If you are a limited liability company, you do not have to get an EIN number because you can use your social security number as a sole proprietorship. Let me repeat that. If you form an articles of organization, you do not have to get an EIN number because an article of organization can operate as a, go back, sole proprietorship.
But then you are personally responsible.
Then you are 100%, say it again.
Personally responsible if somebody wants to sue you, or you're gonna have to pay all the taxes from your personal accounts. So you form a business account to protect yourself and your money.
There you go.
Yeah.
Now, if you say, I want to be a general partnership, what's your name, sir? Matt?
Cat.
And me and Miss Matt, I like that. Matt and Cat, we form this LLC, right? Do we need an EIN number? And we say, we want to be general partners. Do we need an EIN number? Yes. Because the EIN number is going to check as a general partnership. Me, Matt, and Cat want to be a corporation. Do we need an EIN number? Yes, because now we got to tell it we're going to be taxed as an S corporation. But if I say I'm not worried about Miss Matt and Cat, or Miss Cat said, forget y'all, I'm going my own, she don't need an EIN number. But should you get one? Absolutely. You should never use your social security number.
There's so many different ways you could file with a corporation versus your personal taxes. There's so many more write-offs.
Yes, and protection.
So then, with an S corp, with multiple people,
Up to 100.
okay, will that EIN number be the same for each person?
Yes, because the entity has got the EIN number, not you.
Gotcha,
The entity has the EIN number, not good. That's like the entity. See right here, it says your employee identification number, not you. But it's going to go next slide. It's going to give each person the K1 form for their percentage of ownership. It's Matt and Miss Cat and I, 33 and 3rd. Okay, this is the better. 40, what's my name? 20, right? 33. Miss Matt is going to get, Miss Cat is going to get 40% K1 form.
41%, because then I'm a woman.
Hey, we're going to 40. We just lost our ownership. Now, but guess what? She's 41 and she is the what? Controlling partner now. Member.
There's more grants
shareholder.
for
Yes.
women in business.
Because now she got 41, you got 39, I think I got 29, my math is right. But Ms. Cat is in charge now because she owns 41%, but all three of us is gonna get a K1 form because this is due March 15th. But why? Because you gotta do this so you can get your K1 form to go on your individual tax return. Because remember, you're not doing no more C corporation, you're not doing no more Schedule F. Because, let me correct, you are still doing a Schedule F, but not individually. You are still doing a Schedule F, and you're gonna attach it to the S corporation. You're gonna still do your Schedule F, go back one slide, and you're gonna attach it to the S corporation.
Quick, 2039, can you override her?
2039.
Yeah.
If we come together now, if we come together,
Yeah, y'all can kick me out.
if we come together, put it as one vote and share. One vote
It
and share.
sounds like that's what somebody did to Cabela's and basically bought them out and now it's all.
Well, and see what if if Ms. Matt and Pat and say himself coming, all I gotta do is come and say, I wanna buy one of them out, or buy you out, buy both of them out, now I got control of the interest. Cause I can buy both of them out. That's what a lot of corporates do, they go buy the shareholders out. House to take over, they go buy
So in
out.
these three scenarios,
Mhm.
what is the difference in terms of individual liability protection?
Liability protection falls under the corporation because this corporation right here, normally, like you say, not prisoner of air, it carries liability, not you. It carries responsibility, not you. As we were just in the conference in Nashville last week, not only our attorneys, we had the USA attorneys, they all, say they don't recommend, it's not wrong with it. Partnerships and sole proprietorship. Sole proprietorships, we've seen for years, you are 100% responsible as a sole proprietor. You are 100% liable. Am I right, Ms. Metcalf? As a 1065 partner, you can still drill down to each individual owner. And in some states, if one owner do something crazy, all the owners are liable. That's why our recommendation, and most recommendations, file an S corporation election. It carries responsibility, not you. We're not lawyers, we're not lawyers. Let me be very clear, okay? It carries responsibility, not you. It receives the money, not you. And each member of the 100 is going to get a K1 form to put on their personal tax return. That's why even we tell you today, if you are a sole proprietorship, don't. Because when you file your taxes, you never have to file a Schedule C again. You're always going to file a Schedule F now and attach it to the corporation. But if you are a sole proprietorship, do not be a sole proprietorship. Be an S corporation or an INC, whatever. Just don't file Schedule Cs anymore. Okay? Any question? Got a question?
We weren't planning to create an LLC. We had a friend who works as a contractor seeing what we were doing on our little farmstead, which is mostly to feed us chicken. And he was like, I hope you're writing all this off. And so I was like, okay, maybe we form a business where we can sell chicken and any other agricultural things like run dump trailer services. And so we bought dump trailers, skid steer, a building that's like half workshop. And we thought of that as all these business expenses where we're trying to get money back from my wife and I's 9 to 5, where we pay typical taxes to the tune of like $60,000. And so I guess my question is like, I think clearly we need a lot more consultation and stuff, but is that even possible what we're trying to do to like
Get your money back?
to write off all those expenses with the goal of like creating a chicken farm that will never be like super profitable, but will allow us to write off a bunch of equipment that we were going to buy anyway and try to get back some of the taxes that we pay through our computer jobs.
Now, let me say this. Don't ever say it would never be super profitable. I tell people all the time, I used to do all the way more now. We're a big firm, not a big firm, but, you know, I have staff, we have departments that does everything now. But be careful when you say that, because you just told IRS now your hobby.
Yeah, I hope they're not.
Be careful when you say that. Okay, you always want to say you're in this for business, okay? First of all. Number one, people say, I'm sorry, I want my money back. But you're not going to get your money back. You're going to get credit on money you're still earning. You're not going to get a dime back. Unless you keep records of what you put in. And when you start making profit, it can pay you all that money back. So a lot of people say, I'm sorry, I'm getting my money back. You're going to get credits. The only money you get back is your adjusted gross income on what you pay taxes on. A lot of people say I'm a sole proprietorship, but they're going to say, as a Schedule C or a Schedule, I'm zero. But I always say, well, how are you that? Because you got to have at least a profit to get earned income credit even as a sole proprietorship. You get earned income credit only on money you made. But if you're always Schedule C, Schedule F zero, you ain't getting a dime back. You must have, I don't like quote specific numbers, 18,000, 20,000. Now you're going to get a refund. Now you're getting credit on that money. You're not getting money back. You're getting credit on your profit.
But does it reduce our taxable income?
Yes,
for our job?
absolutely.
See, he's talking about, he doesn't work for his EIN, for his entity. He and his wife have jobs from different companies.
That's an offset. That's why I would recommend you to form an S corporation and get that K1 form, next slide please, and you're going to put that negative K1 form on your 1040 Schedule C, Schedule E Part 2. That is your additional charge, we tell people, because now you're saying, me and my wife made $200,000, but wait a minute, we got a negative $50,000 on our K1 form. So now your $200,000 just became taxable at $150,000.
Yeah, so any liability on your K1 rolls right on your 1040.
It rolls to your 1040.
Right.
But one thing about that now you and your wife are operating as sole proprietors, right? You both have a job. You go out here, have an accident, somebody bite into your food or whatever. Now you and your wife are liable, and the income that you're making is liable. But now, I'm not a lawyer, I'm not trying to be lawyers, we're lawyers. If you operate as this entity, it carries a liability, not you and your wife. It can only be sued for the assets of this entity, not you and your wife.
And we most likely didn't file as an S corp since my EIN letter says.
Did you file a Schedule C or a Schedule F on your personal tax return?
He's got his letter.
Your letter says a Schedule C. Yep, I can look at that. See that right there? You see that paragraph said 2553? This is a Schedule C. I can look at it and tell you right now. Because see here, it says sole member.
Right. Okay.
That's a Schedule C or F.
So
Now,
we need to
you need to file 3253.
You're an accountant, you'd be an amendment.
Yeah. You need to go and file this form right here, a 2553. Go to the letter. Go to the letter. Look at your line on the third paragraph. It will say, don't you have on your letter? It will treat it as LLC, eligible as a 2553.
Yeah.
Because you checked that box, you're a sole member, so it knows you are LLC.
Okay. Got it.
See, the INC can also be considered a 1065 or an S corporation. The INC. But what's the difference in the INC? You have to have bylaws and you operate under the laws, corporate laws of the state of New Mexico. But an LLC, you can choose which way you go. That makes sense now. I want to make sure everybody's clear now. So now, yes sir.
So if you file as a corporation, whether that's or whatever else, and you work for an employer and get a W-2, do you roll that W-2 into the corporation?
No.
Isn't that what he was asking?
But his W-2 goes in the personal tax return. The corporation is a separate return.
Yeah.
Go to corporation. the corporation, remember now, remember I said, you're gonna file an individual tax return, and you're gonna file a corp, go to 1120. You're gonna file a personal tax return. This, go to 1120. This is, go to 1120.
They're two different people, actually.
Exactly. There you go. You're two separate people. You can't put your money over here because you got gross receipt, not on K1 on schedule front, because now he is operating on another job. That's his 1040 schedule, 1040 tax return.
Mr. Tennie, I'm sorry, we have people coming to look at the farm. We told them we'd be there 11:15, so please forgive us.
Okay, we're going to wrap it up in a few minutes. Okay.
Thank you.
I don't want to go over time.
I'm sorry, no, we can leave, we don't want to hold anybody else up. Thank you.
Okay.
Okay.
We are the end anyway.
Thank you.
Yes, sir. So you see what I'm saying? He can't put that on his 1120, only if he loaned the money to it. He put on the balance sheet, that's loan to 1120. He can't put his W-2 income over here. That goes to his 1040 tax return. But if he loans, if he take money from that 1040 and loan it to it, that goes to the balance sheet of his corporation. He can't roll his personal income into his corporate tax return. His personal income goes to his personal 1040. I didn't say the word schedule C or schedule F. It's 1040. That's where you find your personal tax return. Your personal income. Now, if he's getting paid for a corporation, he still can't put his income on here. The only thing he can put on here is compensation of officer or salary and wages. It carries that deduction. He still got to follow his personal tax return. Anytime you pay yourself, that's personal income.
Is there any reason, again, if you're a sole proprietor, and why would you ever want to form an LLC as a sole proprietor? If you're not really...
Because you don't want to be a sole proprietor.
No, well, yeah, because you said that's one of the options, and so would you, is there any reason you'd ever want to do that?
No, because most people that never read the letter notice of 2553. That's why it got to end in the letter for you to follow 2553. You're right, sir. Most people, out of 5 people, never filed. Now, you still have some limited liability protection as an LLC. Now, that's for the lawyers community. You got training. You still have some limited liability protection because you're LLC. But most people want to form an entity versus a sole proprietorship. But most people...
Or even a partnership.
Or intensified partnership.
Yeah.
A lot of people just don't have a lack of knowledge knowing who never read the letter to file 255. I'm sorry, I want to roll time to it.
You said under the LLC, because it's really the way you're going to file, you can file a LLC as a corporation, S corp,
or a
partnership,
or sole proprietorship.
Right, any of those 3. Why would you do that instead of just going straight S corp?
Because a lot of people don't understand, when you check the box single member, you just told IRS you're sole proprietorship. Right. You check the box multi-member, you just told you're going to be filed as a 1065 partnership. You should have checked the box on corporation from the start.
For even under LLC?
Even under LLC, because remember now, LLC or INC, you can do 2553. Because if you see in the first part, it says 8832, that's for INCs, okay?
But you wouldn't want to file as a corporation at the state level because then you'd be qualified as a corporation in the state, subject to state corporate tax.
If you file as an article of incorporation and statement, you qualify for, you're right, you're paying state franchise taxes and you're under government law. Now, once you file like an LLC, you don't pay state taxes at an LLC as a sole proprietorship. You don't. Only as a partnership or corporation. LLCs as a sole proprietorship don't pay state franchise taxes. But 1065s, ISCs pay, our state's on $25. Okay. You pay state franchise taxes.
Very briefly, what's the difference between C Corp and S Corp?
C Corp, a C Corp is a standalone corporation. It is its own entity, corporation. S Corporation, it pays to the shareholder.
Gotcha.
S Corporation pays to the shareholder. A C Corporation pays taxes. S Corporation don't. A C Corporation cannot help the shareholder. It cannot offset your debt. It is a standalone. It pays its own taxes. And when you pay payroll, it pays payroll taxes. That means it's double taxation. An S corporation does not pay taxes. If you pay payroll taxes, it only pays payroll taxes, but If it lost 20,000, you pay yourself 50, it offset your personal income by $30,000, or $20,000. We're gonna wrap it up. Any more questions?
Thank you.
Okay, one quick time, so one more, keep on. One thing I like, we're gonna keep on. We gotta go to the rest of it. In our office, keep going. One form, a lot of farmers in our office, keep going, we're gonna show one form. A lot of farmers who started business, this form called 982. A lot of farmers get 1099Cs, cancellation of debt. When you get a 1099C, you're supposed to put on your 1040 and pay tax on it, correct? Wrong. If you get a cancellation of debt, next slide, you put on form 982, check this box and discharge due to qualified farming indebtedness is excluded as taxable income. A lot of people get cancellation of debt and put it on their personal return and paying taxes on it. That's a mistake today. They need to put it on 982, even if you have Chapter 11, personal residence. I'm broke up in solvent, but farmers has a clear option. Discharge due to qualified farming indebtedness is excluded as taxable income.
Wow.
You don't pay tax on that. These are things we're trying to certify, okay? You don't, it's excluded as tax. People say, oh, you look at us up. No, nobody else. It's excluded as taxable income when you qualify. Okay? Thank y'all so much. We're going to thank y'all so much. 843 and all like that. Off phone. But any questions, please don't hesitate to give us a call. We want to work with you. We want to be your firm and stuff. But no type of business you are, everything you do every day carries, keep reducing tax income. Go to contact sheet and stuff. And that's what you have. Go to contact sheet. Now, if you have any questions, please don't hesitate to give us a call, okay? All the information that was provided was helpful to everyone.
Thank you.